So today, we're digging into a pretty powerful theory from an economic strategist. It's all about a signal that just went off in the markets. You see, the price of silver has tripled. Now, according to this source, that isn't just another market move. It's a historical warning shot. It's a sign that a huge economic reset has already started, even if you can't quite feel it.
So is this just another rally for investors to get excited about? Or is it something way more significant? The source material we're breaking down today makes a bold claim. A violent surge in precious metals is never random. Think of it like a flare shot into the night sky, signaling that a major economic shift is coming, long before most people have any idea what's going on.
Okay, let's get right into it. The whole heart of this theory is that a price surge like this isn't just noise, it's a message. The source argues it's a clear signal that confidence in our currency, the very bedrock of our entire financial world, is beginning to fracture. I mean, think about it. The whole economy is basically this giant machine that runs on one thing and one thing only: confidence. We all just have to believe that the dollar in our pocket today is going to be worth about the same tomorrow. When that belief is solid, the machine runs smoothly. But according to this theory, when that confidence breaks, the whole machine resets. So next time you see a chart of silver or gold just spiking upwards, the source says you're not just looking at lines and numbers. No, you're watching the raw emotion of fear get turned into real-world action. It's that exact moment when people start to doubt the long-term safety of their money and they run to something tangible, something you can hold, something that can't just be printed out of thin air.
Now, here's where this theory gets really compelling. The source claims this isn't some new 21st century thing. Not at all. This exact signal, a tripling in the price of precious metals, has supposedly popped up at critical moments all throughout history, right before a major economic reset. And the source points to some pretty dramatic examples. We're talking about the Roman Empire, the Netherlands, Great Britain. In each case, the price of gold and silver reportedly tripled just a few years before their entire monetary systems got a complete overhaul. The theory says this is a recurring pattern, a clear historical echo, time and time again. And this quote really gets to the heart of it. Precious metals are like the economy's canary in the coal mine. They move first, long before the crisis is obvious to everyone, long before the price of milk or gas starts to shoot up, and way before the news starts throwing around words like crisis or collapse. All right, so this brings up a huge question. Why does the source believe that this time is different? Why would this signal be even more important today than it was in, say, ancient Rome? Well, the argument is that our financial system today is built in a very unique and maybe more fragile way. At the center of it all is a mountain of debt unlike anything we've ever seen in history. The source argues that our modern financial world is built on this colossal amount of debt, both what we owe personally and what the government owes. It's grown so big that it's way beyond what the economy can actually produce, creating a situation that the source calls, well, mathematically impossible to pay back under the current rules. And this chart, wow, it really shows you what happened. After the 2008 financial crisis, regular people, households, they actually did a good job of paying down their debt. But that debt didn't just disappear. No, according to the source, the government basically soaked it all up like a giant sponge, taking on obligations that would have been totally unthinkable just a generation ago. And this all comes back to that one word, confidence. When people believe their money is stable, saving it makes sense. But when they get scared that it's going to be devalued, maybe to deal with all that debt, they start running toward what are called hard assets. Things like gold and silver that can't be printed into oblivion. The source really singles out silver as a powerful signal. And you might be asking, why silver? Well, because it does two jobs. It's not just a monetary metal that people buy when they're scared, it's also a critical industrial metal used in literally everything, from solar panels to all our electronics. So its price reflects both that financial fear and real-world demand. It's like a system-wide alarm bell. Okay, let's keep building on this. If this signal is so loud, why doesn't it feel like a crisis for most people right now? Everything seems kind of normal, right? Well, the source has a name for this period, the eerie calm. And there's a specific economic reason for this delay. The key concept we need to understand is something called the velocity of money. It sounds complicated, but it's pretty simple. It's just how fast money is changing hands out there in the real world. Is a dollar moving quickly from person to person, or is it just sitting still? According to the source, for years now, the velocity of money has been super low. A ton of money has basically been trapped in the financial system in things like stocks and bonds, instead of flowing down Main Street to buy coffee and cars and groceries. And that's why we haven't fully felt the inflationary pressure, at least not yet. So how does this eerie calm finally end? The theory goes like this. Once that public confidence truly breaks, the velocity flips. People suddenly don't want to hold a currency that's losing its value. They rush to spend it on real stuff, anything. And that sudden flood of money into the real economy is what causes prices for everything to go up. Not just slowly, but really, really fast. So, what's the big takeaway from all this? According to this strategist, we are in a very, very narrow window of time right now. It's like we're standing on the border between two worlds. The world of quiet signals that only a few people are noticing, and the world of visible consequences that everyone will experience. And this really drives home the stakes. The source argues these resets aren't just dry economic events, they are massive transfers of wealth. History shows that wealth tends to move, and move violently, from the people who kept trusting the currency to the people who saw the signs early and moved into real assets instead. So for anyone who wants to follow this theory, the source lays out a few key things to watch. It's not just about the price of silver. It's about watching the speed of money, the structure of all that debt, and looking for weird gaps that might open up between the prices of financial things, like stocks, and real-world things, like food and energy. And really, the ultimate message from this source is all about urgency. The time to understand what's happening and to prepare for it is right now, during this eerie calm, while most people still think everything is business as usual. Because once the reset becomes obvious to everybody, the opportunities to navigate it get a whole lot smaller. So, there you have it. The theory is laid out, the historical parallels are there, the signal, according to this strategist, has already flashed brighter than it has in decades. And it leaves us all with that one massive critical question. If this analysis is even close to right, what happens next? And how does this eerie calm finally break?